All right, what's going on, team? Hope you guys have all had a wonderful start to your week here. So, in the last video, we focused on some actionable trade setups that we can see through the use of candlestick setups. And even just looking at this Dogecoin monthly chart, I can already see something that we could have seen in the last video, but we were really focused on the daily chart. Well, in this video, we're going to focus on why it can be helpful to use multiple time frames in our analysis to give us a better edge on the market. And this idea is kind of going to be talked about in this video, the next one, the one after that, and really every video from here on out, because it's a key component in my trading model, right? We really want to be focused on multiple time frames at once, and we always want to be trading in the direction of our higher time frame. So, for example, last time we talked about Doge, right? And I know it's hard to tell from this chart, but let's go ahead and zoom in to the daily, and we'll see exactly what we looked at last video, right? We focused on how we can capture profits during this downtrend, how we can potentially avoid trading during this ranging market while still taking some trades into these lower highs, if you like to do that, and then how we can capture the trend flip once this downtrend turns into a range and the range turns into a new uptrend, right? So we captured this uptrend, potentially captured some profits during the ranging market, and also captured this downtrend. But let's look at the real big picture for Doge, right? In general, for Doge, we would rather play on the long side. We would rather be a buyer because big picture, since Doge launched in 2016, this asset is in a long-term uptrend. So historically, every time this trends lower in these bear markets, it ends up making a higher low than the previous one. And that's why as you come lower and lower, when you start to put in signs of a bottom, we would look to be cautious on the sell side and look to position ourselves for this bigger picture uptrend, because that is where most of the money is going to be made, right? You think more people made money shorting Doge from 20 cents down to 5 cents, or you think more people made money shorting or buying from 0.002 to 60 cents, right? Here, you can capture, 60, 70% gains. That's good, especially in a bear market. That's good. But when you look at the upside returns, 1,700%, 1,800%, almost 30,000%. And then, in my opinion, this cycle, we will probably see upwards of at least 2,000% from the lows. And keep in mind, this is just speculative. We'll simply trade whatever we get. But in general, there's a lot more money to be made being a buyer of Dogecoin than being a seller, right? Now, if you come in and, you're compounding on each of these lower highs, you can make a lot of money still too. But in general, especially in crypto, you're going to make a lot more money being a buyer than a seller. But it all comes down to timing. So let's start with our higher time frame. Now, typically, my favorite time frame to take trades on is the daily. I just think it's an all-around great time frame. It's not too zoomed in, it's not too zoomed out. You can have high confidence in your swing trades, but you don't got to worry about coming in all hours of every day to make the trades, right? In reality, the daily closes are at 8 o'clock p.m., at least where I live. It might be different where you guys live. But in reality, you only have to check the charts 5 minutes a day if you want. You come in, or 10 minutes, right? You come in 5 minutes before the daily close. You see how prices acted that day. Has it closed below my invalidation? No, nothing to do. Has it gone higher than my entry? No, nothing to do. Or price has closed below my entry, so I know to sell, or price has gone above my entry, so I can take some profits. And that's really it, right? You come in 10 minutes a day, you take your actionable trades if there are any, and then you go on with your life, right? Versus if you're trading a 15-minute chart, you're going to be staring at the chart for probably 8 hours a day. Not everybody wants to do that. The good thing is, all the actionable setups we're learning, candlestick setups, EMA confluence, monitoring higher time frames, that all works on the lower time frames if you want to be a day trader, for example. I, however, have no interest in that, so I mainly focus on the higher time frames. So let's talk more about this idea of trading in the direction of the higher time frame. If I want to be taking trades on the daily, then there are two other time frames I want to be aware of, and I typically want to trade in the direction of the trend on those higher time frames. So that would be the weekly and the monthly. Likewise, if I want to be a day trader on the 5-minute chart, I still want to be monitoring higher time frames, but in this case, maybe we'll be looking at the 15-minute and the 30-minute. Or maybe I want kind of a nice little mix, right? Maybe I'm going to trade the 1 hour, not strictly day trading. Maybe I'm day trading a little bit, but I'm kind of swing trading too. And maybe I'm monitoring the direction of the 4 hour and the daily, right? This is typically how I view things, a set of 3 time frames, right? Whichever 3 you're going to use depends on the type of trading you want to be doing. This is more of a swing trade / long-term investment. This would be day trading or scalping. And then this would be kind of a mix of lower time frame trading and swing trading, okay? I'm not going to put much focus on these. If there's interest from you guys in a separate video on day trading, we've covered this a few times on live streams before, and we got some pretty good reception. So if you guys have more interest in a day trading video, I'd be happy to do it. Just keep in mind, I don't use this model for day trading much. It does work just as well and sometimes even better than it does on higher time frames. I just find this is easier, more consistent, has less noise, and more people I think are going to be interested in this because this is a job, right? If you're day trading, you need to be here 5 hours, 6 hours a day. Not necessary. I mean, you could do a 1 hour day trading session, but in general, you're going to be wanting to watch the charts majority of the day. Versus this, you have to be aware of the daily close once a day for like 10 minutes, the weekly close once a week for 10 minutes, and the monthly closes once a month for 10 minutes. Generally, I feel like a lot of people go for the day trading route, and I think it's a mistake. For most people, at least. Some people are going to excel at that. I find I do all right on the day trade side, but it becomes a lot easier to kind of trade against what I know is true. For example, I know the monthly on Doge looks like this. So in general, I would rather be a buyer versus, if our long-term asset looked like this, in general, I want to be a seller because in the long term, this is trending down. Not the case for Dogecoin, right? So anyways, let's go to the monthly and let's start what I like to call the top-down analysis. Meaning, since we want to trade in the direction of our higher time frame trend, in this case, the monthly, we're going to start by figuring out the direction and trend of the monthly. Then we're going to look at the direction and trend of the weekly, and then we'll go down to the daily, and we'll see what kind of actionable setups we have, ideally in the direction of the weekly and the monthly. And this is not always the case, right? As we saw in here, when we were on the daily, we'll go ahead and zoom in just to remind you guys, that's what we focused on last video mainly, was this intermediate term downtrend, which was, potentially very profitable. So even though the monthly was still in a long-term uptrend, there are times where you might have a monthly uptrend inside of a weekly or outside of a weekly downtrend while also having a daily uptrend. You might have different trends on every time frame, but more often than not, the best trades you're going to have are going to come when all 3 time frames are in the same direction, right? That's going to give you the best win rate on your positions when you're all trading in the same direction, okay? So if you guys also remember, I pointed out when we were talking about these sell setups with these lower highs that at this point, it was time to maybe change how we're thinking. Right now, instead of lower lows and lower highs, we now have a higher high and a higher low. Can that be seen from the higher time frame? And the obvious answer is yes, right? The same way we're tracking individual candles for setups on the daily, we do it on the monthly. For example, this was basically the entirety of that downtrend that we focused on last video, right? And we can see on the monthly, the same thing we saw on the daily, that here's a nice bullish candle right here, right? It gets closed below right here, starting a bigger picture downtrend. And what do you know? You go on the daily, that was the exact same time we were starting about playing on the short side for our daily trades. So that was a pretty good confluence. We know we're in a long-term uptrend on the monthly, but the monthly has given us a sell signal with this bearish setup. So it makes sense. And I'm imagining if we go to the weekly, we'll have pretty much the same exact results, right? We've got lower lows and lower highs starting to form. So pretty much everything is lining up outside of the fact that, yes, long term, we still want to be a better buyer. But we can take some profits from the market during the bear market so that when we come in as a better buyer in the bull market, which is really just starting now, we can maybe have a little bit more capital. Okay? So anyways, let's look at why that big move on the daily is also seen on the monthly. And I'm sure it's screaming out to you guys right now, but this was that first major sell setup. And at this point, we're simply going to watch these lower highs from each individual monthly candle. Here we have a little failed breakout, right? We failed to close above. At one point during this month, this was a big yellow candle about to close a bullish engulfing. And then the sellers came in and knocked it back down, and the downtrend continued. And then we keep following these candles. And finally, over here, we have a massive reversal, meaning that on the lower time frame, as we saw in the daily last video, this downtrend has now turned into a bit of an uptrend. So again, as we know from the last video, this got faded pretty hard. I guess we can go ahead and zoom in on that real quickly. This massive breakout immediately got sold into, and we had another little bit of a downtrend slash ranging market for the better part of an entire year. Okay, but all the while, even if you're coming in and you're taking sell setups in here and compounding and whatnot, you're still thinking at some point, we're probably going to make a higher low and start a new uptrend, right? And we see the same thing on all of our time frames. So, trying to think how I want to go about this. Let's just focus real quick on each time frame, right? So we have a massive buy setup on the monthly. And then you have a little bit of a downtrend on the daily and on the weekly. But let's just follow these lower highs, right? On the monthly candles, the same that we did back here. A little bit of a failed breakout here. Right here, we get a double bull setup, and this is one of my favorites, where you have an engulfing, in this case, a bottoming tail plus engulfing right here, and then you pull back on the lower time frame, you make higher lows, right, in front of this low, and you get another engulfing setup. Now let's check this out. Let's look where that is. On the daily, that's in these time frames, but if you remember, our first really obvious long entry in the daily was over here. So maybe at this point and this point, you notice, all right, we just had a double engulfing setup on the monthly. So we know the monthly is looking kind of bottomy, right? Let's go look at the weekly as well and see if we can see the same things. In this case, I would say it's not so obvious on the weekly, right? You still have these lower highs and you still have lower lows. But at this point, on the weekly, we see the exact same thing we saw on the monthly, right? Higher lows and a nice big engulfing setup here. So in theory, if you're trying to play this a little bit more long term, this is probably the ideal time for you to start buying, right? Now, at this point, let's turn on replay mode. Here we go. At this point, on all time frames, it's still a little bit contrarian to be a buyer, right? This is still a downtrend. You know, we're trying to make higher lows in front of our original bottom, but we haven't really done it yet. You know, we kind of need to get a move up before we can be confident that this is actually going to be a meaningful higher low. But we do get a double candle setup, right? And on the weekly, we have the first sign that this asset is starting to bottom, where instead of lower lows, we're starting to make higher lows. Okay, so at this point, probably wise to stop selling, right? We don't want to be selling these bounces anymore because we are so close to our key long-term lows, and we're also starting to make higher lows. So maybe you come in on the monthly and you recognize, all right, well, we've essentially got 3 good buy setups here, right? This massive trend reversing engulfing, another smaller engulfing, basically right in front of the previous one, and another one here right in front of this previous one. Not a bad time to start a long-term position, yeah? Now let's go down from the monthly to the weekly and see if we get any similar signals. And we do. A massive higher high over here, our first higher low right in here, which we end up holding all the way over here. See that? And now we don't quite get as obvious of a higher low at this point on the weekly as we do the monthly, but I think it's 1 or 2 weekly candles ahead right there. That's a really nice buy setup on the weekly. You know, we have a big monthly candle. We have 2 more monthly candles that just showed up bullish. And now we have a really nice bullish engulfing setup. And in fact, you could argue this was already a nice bullish engulfing setup right here. But let's say you're looking for a little bit of a trend break, right? And on the weekly, we break above this local high here. That could be a good chance to start your position on the long side if you've been trading on the downside for the better part of, 2.5 years now. Right? And then you go in on the daily and we see basically the exact same bullish confluence. Right now, we are still in a bit of a downtrend, right? This is still a pattern of lower highs and lower lows, but we've got the first signs of a reversal with this higher low, 2 bullish engulfings on the monthly, and a bullish engulfing on the weekly. So at this point, I would start to be very cautious if I was a seller and probably look to start positioning myself on the long side with this little higher high break here, right? So let's go ahead, let's get rid of the replay and see what follows. So again, the reason I used this example last time instead of something like this is more of a safer bet, right? What we're talking about here is a bit contrarian, right? Because you're still in this downtrend, because the monthly, oops, don't want that. because the monthly is still looking like this, getting involved here is contrarian to your bigger picture trend. The only thing it's not contrarian to is the long-term trend, right? Because we know big picture, we want to position for a big uptrend. So that's why I focused more last video on this, because some people really should not be trading contrarian. I think it's okay to be patient, wait for the pattern of lower highs to break, which happens over here, and then get involved at the next breakout over here. I think this is a fine trade. I think whether you get involved contrarian or not, this is a great setup. Like, no doubt about it. But when using our multiple time frame analysis, we can see, first off, this downtrend is pretty much over at this point. And we enter a ranging market where on the lower time frames, you could still sell the bounces if you want to be a bit more active. But big picture, I really want to be getting buys as close to the lows of this market as possible. And that makes, let's show the range here, right? The range is from this low to the high of this big move. In general, we really want to be getting some good buys on the bottom half of this range. You'd like to be a better seller up here and a better buyer down here. Yeah? So when we get these nice setups on the monthly, these nice little bullish engulfing setups here, that's a good time to start positioning yourself for the bigger picture trend and focus less on this intermediate term trend. So, and then of course, even more so, now that the big picture trend, let's talk current day, this is a massive long-term breakout. I've got it on logarithmic, so it doesn't look as crazy, but when you turn it on linear, you can see just how crazy of a chart this really is. This is a huge breakout. And I imagine that by the time a lot of you guys are watching this, Dogecoin probably will have traded up here. I would not be surprised. But now we have a monthly trend that is back up inside of our long-term trend that's up. So this is our big picture trend. This is kind of our, there's big picture, which is like years and years. And then there's, quote, long-term, which is like many months, right? Here's our long-term up. Our big picture is up. Our weekly trend is up. And, no surprise, our daily trend is up. This is when the best trades are going to be taken. And this is why I really like this buy setup so much. Because our year-to-year trend is up. Our month-to-month trend is up. Our week-to-week trend is up. And this is the first major high or low after this breakout on our daily trend. Multiple time frame confluence right here. This is when your best trades are going to happen. And a lot of people are going to say, well, but wouldn't you rather have bought the bottom? And of course, it's always better to buy the bottom. But let's be realistic. Most people are not going to buy the bottom. And it's something you should really never focus on. Don't focus buying the bottom. Don't focus on selling the top. What you want to focus on, if this is the whole move up, right, just like this is the move down, you want to capture the middle, like 70%. And that's why the majority of that downtrend video we did, we focused on this. Not on how to sell here, not on how to buy here. You want to capture the meat. You're not going to sell here, and you're not going to buy here more often than not. But if you can capture this, you're going to do better than 99% of traders. Okay? So that's what we're going to focus on here as well. But I think it's okay to be contrarian. As we saw, there's a good monthly engulfing here. There's a good monthly engulfing here. There's a good weekly engulfing here. You can start to get some entries on light size with risk all the way down here. And then you can start to hit harder when you get your daily signals, which really come in over here, like we focused on in that last video. And it's funny, this is kind of the same setup that we're seeing in this whole region here, right? Big move up, little downtrend, breakout, and run. Big move up, little downtrend, breakout, and run. You know, it's like a move inside of a move, if you will. But anyways, let's see. Did I hit everything I wanted to in this video? Yeah, I guess so. I mean, that's just a nice introduction, about 25 minutes to multiple time frame analysis. And again, we're going to talk about going in more in depth into this in the next video, because we're going to start to use our moving averages to give us an even clearer picture of how we can see the existing trend. And we're actually going to have some fun, not even using the candles to visualize our trends on multiple time frames. And that'll help you see better. Oh, look, all of our EMAs are rising. That's a good uptrend to be in. All of our EMAs are falling. That's a good downtrend to be in. And now all of our EMAs are rising again. Once again, a good uptrend to be in. But we'll talk more about that in the next video. We're going to start to use our EMAs a bit more. We're going to start to use our slow stochastic and our momentum indicators, and maybe do a little intro into how to manage your trades as well. So I hope you guys enjoyed this intro to multiple time frame analysis. Again, I know it's kind of complicated. It comes easy to some people. It comes harder to others. If you guys have any trouble or you want me to clarify anything or help you out, you're always welcome to reach out to me in the Discord block circle. I'll be happy to help you any time of the day, however I can. So until next time, guys, trade safe, be smart. Peace.